Hi, welcome to Market Minute. This is where we analyze the markets looking for opportunities. We see a big opportunity developing over the years. And we've talked about it the last several weeks about a rotation, and it's starting to play out. But we see some visibility that this could last a nice number of years. So, as earnings momentum broadens out, the stock market will broaden out. We think the small cap space is going to be the leading space. And I've got some crazy data to show you on the short positions in these small cap companies. So the strategic shift. So if you're managing some clients' money and you need to allocate it, we think it's prudent to start allocating some into small cap and then just broadening the overall positions out more so to look like the overall market. So we think what needs to happen is we need to see some help by the Federal Reserve and a path to bring interest rates down. That'll ease the pressure on the overall economy and let the rest of the economy start to grow, not just the small area of technology or the government related areas as well, but the rest of the economy to start to grow. And then what we would like to see, we think it'll happen regardless who wins the election, but in particular under Trump, is a pro-growth government, but a shrinking overall government size. So pro-growth policies, but shrink the overall government. So we see potential for a very exaggerated move in small companies. So the PE of the Russell 2000 or the PE of the S&P 600, which is a small cap indexes, is somewhere between 12 and 14 times. We think those can double. So we think that they can get as high as what the stock market is currently, about 23 times. So what's going to drive all this? And it's earnings. So if we look out to next year, big earnings growth of the Russell 2000, big earnings growth. So roughly 3% this year, looking for 36% next year. We think a lot of that earnings is kind of locked down because the regional banks are getting better. So just how the numbers are regressing, a fair amount of that's kind of baked in that we're going to see a nice increase, maybe not 36, but a nice increase next year. And then if you look at the Magnificent Seven, so the largest seven stocks in the S&P 500, 46% earnings growth this year. And remember, they came off of the depressed level as well, and there's a product cycle occurring in AI. But this 46% is not sustainable, and the expectations for next year is 20%. Maybe it comes at 25 or 28, something like that. But it's going to normalize, it'll be more normal. And then you can see that money that's plowed into those companies to kind of find its way in other areas that still have good fundamentals. So if you look at the Russell 1000 growth and Russell 1000 value, actually both areas are picking up in terms of the growth for next year. S&P 500, it's growing at 7%, maybe it goes to 14, or maybe it goes to 10. But maybe that has reasonable growth as long as we don't go into a recession. And then the equal weights are picking up as well. So the market in general should broaden out. And then the big winner of all this is this tiny small cap sector of the market that if you're a good stock picker, you're going to make multiples what you're going to make in the overall index. And you're going to see funds have to chase this. So large funds are going to have to chase a very small overall sector of the market to outperform. So this is kind of complicated. I'm going to give you the highlights real quickly, but we just want to reiterate our rotation theme. So we think the rotation, we're in the top of the first inning. It's happening. Thus far, it's been magnificent. The Russell 2000 is up about 12% in just over a week. It's been spectacular. In the overall market, it's kind of flattish. So we believe that there will be a correction this quarter. Could be 5 or 10%, but a correction is coming. which is the normal seasonality. So as we entered, the middle part of July, the market started weakening some. We saw that the last week or so, and then it doesn't really play out until September or October. So by the time we get to the end of September, we think things probably will be set up for a nice rally going into year end. That's a historical relationship. Who knows exactly what's going to happen, but we would place our bets at that on that occurring at this point. So the last four major cycles that we've experienced, growth to value, or excuse me, the last three, growth to value. So we had one in 1996 to 2000. That was when growth took off. So it was a value to growth. That outperformed by 120% in those 4 years. As you know, that was a really strong period for growth stocks. And then the next 7 years, we saw value outperform by a lot. So it was up 80% over what the growth stocks were. Actually, the growth stocks really struggled through that period. And then 2014, for the last 10 years, the growth stocks have outperformed by 200%. Again, we think we're at the beginning of this cycle where it's going to expand out. Not necessarily growth to underperform, but the mega cap, 7 stocks to likely not go up as much or maybe underperform the overall market itself. So we'd like to have a nice pronounced bear market recession to get all this sparked, to reset the whole thing, to get everything cleansed out, get these valuations where they should be, let the money flow where the growth is going to go from a beginning of a economic cycle. That's probably not going to happen, but we may see a little mini version of that occur. And then we think that not only the small cap names, but kind of everything's going to perform much better, including the large cap, blue chip type of companies. They are very undervalued. They have good fundamentals. Their growth will likely improve next year. So we think that we would like to see a couple of things happen. One is the government policies to be more pro-growth, pro-economic growth, and for the government itself to shrink. That is the best of all scenarios to occur. And then reshoring is another major theme. So reshoring things back to be manufactured here in the U.S. might cause some inflation, but see the manufacturing to move back into the United States. We think that's another major theme to play. The artificial intelligence, we're in the middle of the build out of the infrastructure needed to actually implement the tools, and that's happening. So we're seeing some tools being developed, but that's a long way to go on the tool part. The actual implementation of AI into a lot of different businesses. Expanding energy needs. So we think it's real simple at this point. Just buy natural gas. Natural gas should go up quite a bit in value in terms of its price because the need for natural gas to fuel a lot of this increased need for energy. Plus, if Trump wins, we're going to export a lot of natural gas. And then lastly, this is my favorite theme, is the obesity play in drugs. This is, again, early stage. There's going to be so many obesity drugs to come to the market. It's going to be like the cholesterol drugs. So many cholesterol drugs came to the market, became a huge overall space. We think the same thing's going to happen in obesity. The drugs that are actually winning right now will probably not be the ones that'll be the biggest over time. So we like that space. It's going to fuel a lot of new drugs, not only in the obesity space, but a lot of new drugs to be developed and brought to the market. So the valuation is compelling in the small, mid, and actually blue chip companies. So we see opportunities for a very nice rotation, if not a longer term, strategic play here that financial advisors and investors ought to be thinking about. And it's going to be a great environment for stock pickers. that can do the analysis of these companies and find the best companies that are going to go up the most. So what created all this, right? How do we get to where we are? Is because the Federal Reserve and the federal government, but the Federal Reserve created all this money. So a 44% increase in the money supply, M2, over a couple year period. So all that money had to go somewhere, and it did. It went into the thing that was the least risky in terms of stocks, and there was a new product cycle occurring. Okay, so it's no longer a new product cycle, and the growth is going to slow a little bit, and that money's going to probably find another home. So where's it going to go? So look at these short positions. Oh my God, I can't believe this. So the Russell 2000, the IWM, which is the Russell 2000 ETF, has a 24% short position. So if you look at the S&P 500, it's much less than that. So the SPDR, as an example, the short position there is about 7%, but 24% is very high. So if that goes up like it has been recently, all those short positions are going to shrink in a big way, and it's a tiny index, and there might be $1 trillion that needs to come in to buy those short positions out. So the Russell 2000 is only 3 trillion in size. So if there's really that much shorted, those stocks are going to go up a lot. The KRE is the regional bank ETF, and 75% of that is now short. It's come down a little bit, but at 75% of that ETF is short. So again, same thing. The regional banks, we think, are improving. Schwab has problems, but they're not a regional bank. Schwab has big problems, by the way. But the KRE, those are community banks. They provide a good service. They have real estate exposure. They probably have balance sheet issues that are being rectified. The real estate, I think, is passing. And so over time, that will become a diminishing issue. And you're probably going to see good earnings growth out of the regional banks next year. And the XBI, this just shocks me how much is short here. 80% of the small cap biotech index, small cap biotech ETF is short. So that's a massive play. So as that unwinds, this index is going to go up like you would not believe. So there's good fundamentals in this sector, and people don't realize it. They just see, okay, this sector needs capital. Interest rates have killed it off. So when interest rates starts to come down, the capital markets get a little looser, money flows back into the space. This sector is going to go up quite a bit. So where should we look? Okay, these are the top 5 sectors of the Russell 2000. This is where I would start. Okay, get some blue chip. Don't get me wrong. Get some blue chip in the portfolios. Blue chip stocks are undervalued. There's catalysts to some of them. We like a lot of the blue chip stocks there. Get some mid cap. But in the small cap space, if you're a stock picker, you're going to make some really good money here. So healthcare, as we mentioned, biotech, that's prime. Industrials, okay, this is a rebuilding of America, this reshoring of America. Bring that business back. A lot of industrial names here that are interesting. Financials, already mentioned this. This will be a good group. Small cap tech, okay. JD Vance is a small cap tech guy. So if Trump happens to win, I think small cap tech will probably play really well. Don't be surprised if Harris comes out with some incentives on selling her policies that will be positive for small cap tech as well. And then consumer cyclicals, there's all kinds of little neat companies here that if we have pro-growth policies are going to do really well. So this is starting with the small cap tech stocks. This is the last several cycles, okay? So this one started in 2007, ended around 2015, and it was up 430%. So quite a ride. Now, if you're a good stock picker, you're going to do 2x that, or maybe even more. Okay, you can really make some good money here. We do great work in the small cap biotech space. So this is going to be a lot of fun for us. So we have a small cap strategy that you can utilize for a separately managed account. We're really excited about what we're seeing here. The next move up 108%, the next move up 112, and then big correction, big correction, right? And then we've held support. So here's the support. It's tested it, and it's starting to move up. Again, you had that huge short position. You got a lot of good data coming out here soon. Be positioned in the companies that have data coming out. The regional banks, it broke out. Believe it or not, it broke out. So there's almost 50% move just to get back to where it was. So we like this area. We're putting our toe in the water a little bit, getting some exposure. This could be, again, could be a really nice sector to have some money in. This week, we're going to see a Google report, and the market's expecting that the earnings momentum is going to slow for these companies into next year. Well, Google struggled a little bit. Google has struggled a little bit and is coming back out of it. We think Google might be one of the best plays for AI. We would like to buy Google on a dip. Maybe we'll buy some CrowdStrike. That's down quite a bit. But Google's an interesting idea. We're going to see what they say, see if they give any clarity as to what's going to play out next year. So any sort of product development or anything like that. But only growing earnings at 13%, you can't get too much higher than a 28% earnings growth. So 13%, it may be caps, right? So maybe think of this as a 25% grower. So therefore, you have to buy it at the right price. So buy it at a reasonable price. You get it, in the less than 20 times earnings. I think that's a good value for Google. And then Tesla reports it's going to be down earnings but up revenue. So that'll be another interesting report. But the key report this week is going to be Google. And if they give any sort of outlook for next year, we'll see how that impacts the overall market and this early stage rotation that we're seeing. But we're really confident in this rotation theme that we have. The broadening out of the market will become much more clear next year. We would like to have a recession occur. A little mini recession would be very helpful for those stocks. Not that we want to see a recession, but it'd be really helpful for the overall market itself to broaden out. And just in general, I would say start to nibble at things. Still be defensive because we have a correction in front of us. Might turn into a bear market. So we're still being defensive. However, we're starting to make some important long-term investments for that next big move up. And it's really clear where that next move up is going to occur. It's in the small cap space, and it's less so as you get up to the blue chip companies. But there's a lot of really good blue chip companies to buy, and we've highlighted a number of those in our weekly piece. And if you ever need any help, just email me. Go to Patrick Adams CFA, send me an email. Sign up for Market a Minute. Get the hard copy. We'll email that to you every week as well, and we'll see how this plays out. Take care.